it was a parabolic top, the losses would be a lot greater right now. So it's consolidating sideways, which technically is very healthy. I don't know how long that consolidation will last, but I know when it's done, we're going to see $10,000 gold by 2030, which is, I also made that call at the beginning of 2025.
For a COMEX gold futures contract is a bet on the price of gold. Yeah, it's not really there for people to buy gold. It's more of a bet. The massive amounts of debt taken on to bail out Wall Street is the other side of the currency. So when central banks bail out a system, that first leverages deposits and then leverages derivatives. On top, you can see how the law of supply and demand overwhelms the real economy with a huge increase in the money supply. And we've seen that M2 is going ballistic everywhere around the world.
Gold and silver are moving through.
Last year, the beginning of 2025, I did a couple podcasts where I said gold was going to go to 4,000. By the end of the year, it went to 5,500, I believe, and peaked out. After it peaked out, people were asking me, is this a parabolic top? Is it over? And I said at the time, no, I think it's going to consolidate, which is very healthy. And that's what it's done. So, if you look, it's not down.
Yes.
If it was a parabolic top, the losses would be a lot greater right now. So it's consolidating sideways, which technically is very healthy. I don't know how long that consolidation will last, but I know when it's done, we're going to see $10,000 gold by 2030, which is, I also made that call at the beginning of 2025. So that call is intact. The fundamentals continue. Banks continue to accumulate, central banks continue to accumulate gold. Commercial banks are accumulating gold because they made it tier one capital in July in the US. And we have voracious appetites in retail in India and China, and of course, throughout the rest of the Western world. So long-term gold fundamentals are good. That means that silver should follow eventually, but silver is way more volatile and is an industrial metal. So be careful if our economic downturn call is correct, which I believe it is. So silver could be hurt more. Gold is, I think, long-term fine. I did say on one or two podcasts when the markets were at their lows at the beginning of April, I said, I have a feeling that Trump is going to, issue a ceasefire or try to negotiate, and that the stock market could rally and we could see new all-time highs. Well, we've seen new all-time highs, but it's been very unhealthy, concentrated new all-time highs. And the risk is, I don't like calling crashes, and I'm not going to call one, but when this corrects, I think the speed of this is going to alarm a lot of people. And remember though, you never crash from the top. We'll get a pullback, then a rally, and then if that rally fails, that's when you got to worry. I did a media hit on Friday with Bannon's War Room to talk about China, because I think there's a misunderstanding. There's this belief that China is going to overtake the U.S. And we've looked at the numbers. We have a report for sale at our website, financetechnologies.com, a China report. We've done a deep dive, and China peaked as a percent of U.S. Priced in U.S. dollars at 80% of our GDP in 2019. Since 2020, priced in U.S. dollars, their GDP is 60% of the U.S. Their GDP growth since 2020, priced in U.S. dollars, has been effectively zero. They've been printing 5%. So that, we believe, peak China is in the rearview mirror. They have a demographic disaster, and now the acute phase of their real estate crisis is hitting. So, when Trump went over to China recently, and President Xi talked about that trap that I can't pronounce, the cities trap or whatever it was called, saying that we need to work together and implying that U.S. was the weaker economy. It's the other way around. They're in deep distress, and Trump's tariffs on China are the right move because they're basically exporting deflation. They're in a deflationary death spiral, much like Japan was in the 90s. And the difference is that Japan exported their way out of that problem, but they are 1/10 the size of China. China has been to make up for their internal downturn. They've been exporting like crazy since 2021, and that's why we're having trade wars. And the tariffs are affecting them. Well, so it's a razor's edge. You don't want them to collapse because that will have contagion effects across the globe. So we actually And I had this discussion with Steve Bannon. We have to kind of work with them because I don't want to be, we put out a report that they're entering the acute phase of their crisis. If nothing's done, that's going to happen. So I'd like to be wrong and have the US and China work together to figure out how to like structurally help them restructure and complete some good trade deals. That doesn't look like it's happening at the moment. So unfortunately, our predictions look like they're going to come true. So we don't want them to, but we need the US and China and Europe to all work together to prevent their collapse. I know that sounds crazy, but that's what you want. I think a lot of it's PR and hype and bluster. And yes, they're trying, but it's very hard to do. The dollar system is very ingrained globally. The other problem is the yuan is very overvalued, and they're depreciating their currency about 10% a year. So a lot of their trade partners probably understand that and don't want to, have a whole lot of reserves of yuan.
Financial institutions are like hedge funds, private equity, private credit, pension funds, etc. They will borrow these funds from the banks and use those funds to speculate, not just in the markets, but also in the derivatives market. And I've even got a playlist about derivatives. I'm going to put it up here, and I've spoken a lot about it. We're going to go through derivatives here, though, a little bit. So the derivatives market allows participants to trade on margin. That's the most dangerous and important thing you need to know, which means that they can, for example, put $5 down and control $100 on a derivative. So, and you might be asking, what is a derivative? Well, a derivative is nothing but a side bet on an underlying asset. For example, a COMEX gold futures contract is a bet on the price of gold. Yeah, it's not really there for people to buy gold. It's more of a bet. A future on the 10-year Treasury note is a bet on the price of the 10-year Treasury note, right? And we are told that derivatives help hedge risk in price fluctuations of the underlying assets. And that is true to some extent. But I would say the derivatives market has become a giant casino. It has been for many decades. I worked in the derivatives market for over 20 years, and I can tell you most of it was speculation. There was some hedging. And its main purpose has been for rampant gambling and speculation in the last 20 to 30 years. So now the part that you probably won't like. So who paid for the bailout of 2008 and also the bailout of 2020? And because there was a repo market crisis that began in September 2019. And the repo market is basically the pawn shop for Wall Street, where they use government bonds and other highly liquid securities to leverage. They use them as collateral to leverage. Well, that pawn shop collapsed. Confidence collapsed in the system and Wall Street. And yes, the Treasury and the Fed had to step in again. So every time it is the taxpayers and those who are forced by legal tender laws to pay their debts and save their wealth in fiat dollars. And that's what the system is all about. That's why they want to keep you in the system. That's why they don't want you outside the system. Only physical gold and silver. So the massive amounts of debt taken on to bail out Wall Street is the other side of the currency. So when central banks bail out a system, that first leverages deposits and then leverages derivatives. On top, you can see how the law of supply and demand overwhelms the real economy with a huge increase in the money supply. And we've seen that M2 is going ballistic everywhere around the world. And that, my friends, is what inflation is. And that's how we pay for it, because it debases our currency and is going to continue to do so. So when central banks bail out the bankers, they're socializing the losses, as I said, because it's all lumbered on the taxpayer. But when Wall Street in the city of London and Frankfurt or Paris bankers make huge profits, they keep it. Hence the term privatizing profits. And this is why the system is so pernicious or unfair, parasitical. Because in the real world of farming, mining, manufacturing, building, and providing essential services, there is no such thing as creating stuff out of thin air. You got to build stuff, you got to provide the service, you can't just promise things. So, for example, it's very simple. $100 invested by a farmer might earn that farmer 4% per annum. So the farmer's profit will be $4. While $100 invested by a Wall Street banker or hedge fund could easily earn $30 to $50 per annum, mainly because of all the leverage. One thing, I'm not against speculation, but what I'm against is that speculators get bailed out by the taxpayers. Yeah, that's the important part here for me. So I wanted to talk a little bit about the Bank of England because it looks like they're providing a lot of repo liquidity to the banks. You can see here by this chart, it's really taken off. And they're supposed to be doing quantitative tightening. But as you can see by this other chart, since the end of last year, the Bank of England's balance sheet is flat. So they have a problem as well. And they're talking about allowing UK banks to buy even more government bonds. They want to lower the leverage rate, the statutory leverage ratio like they've done in the US. And why are they doing that? Well, because the system is so overwhelmed with debt that they need to keep it going. But the Bank of England has been around for 332 years. Yes, it's going to be 333 next year. And it shows because the British people are lumbered with massive debts and taxes. The real sector of the economy has been almost 100% hollowed out. And the biggest industry in the country is finance. What will happen then when this system collapses? And it will. It's only a matter of time. Well, John Exter, a former Fed banker, said that all the hundreds of trillion or even quadrillions of dollars created via money printing and the fractional reserve lending would rush down from the riskiest assets and ultimately go to physical gold and silver or real money. So here you can see John Exter's inverted pyramid. I've added silver on top of gold. I guess you could put it together. But the point here is that you need to have gold and silver outside the system. I'm going to end with a quote attributed to a former director of the Bank of England, Sir Josiah Stamp. And he made a quote about our banking system that has led to this massive Tower of Debt, or Tower of Babel, if you want to call it. So this is what he said. This was in the 1920s, I think. Banking was conceived in iniquity and was born in sin. The bankers own the earth. Take it away from them, but leave them the power to create deposits. And with a flick of a pen, they will create enough deposits to buy it back again. Well, that's QE, money printing. However, take it away from them, and all the great fortunes like mine will disappear, and they ought to disappear. For this would be a happier and better world to live in. But if you wish to remain the slaves of the bankers and pay the cost of your own slavery, let them continue to create deposits. So there you go. And that's what I think about whenever I see the kind of price action in all the markets yesterday, gold and silver and the miners included. Do I really want to, put my efforts, i.e. my savings and wealth, with people who are trying to enslave me? No, and that's why I hold on to my physical gold and silver outside the system.
The big picture